What the market is afraid of, which is what I've been warning about for a long time, is that, inflation's not done. We saw this incredible disinflation for many months, which is what the equity market was rewarding, in this risk-off kind of 4 or 5 month period that we had. But what was driving it was obviously a deceleration in energy and food. And that is over. We are reaccelerating 2 months in a row of reacceleration within the CPI print. Food continues to accelerate. It hit a bottom 3 months ago and his 3rd month in a row of reacceleration. Same with energy. These are these are big readings, and you can see how they can affect the CPI. What we really needed was we needed core inflation to pick up the slack, right? Because core inflation stayed around 4 to 5% while during that disinflationary period, which was really led by energy. And core inflation is now reaccelerating from a 2.4 to a 3. And it's like that really across the board: shelter, services, sticky inflation. It's just not the kind of reading you want to see if you're betting on the Fed pausing, because just like in every cycle, I saw this argument during this disinflationary period. A lot of people were saying inflation's over, supply chain issues, and it's going back to normal. And there's just never been an instance where the genie inflation gets out of the bottle and it magically goes back without a recession. Every business cycle I've ever studied, going back to the 40s, a recession is needed to get inflation back in line. And I don't think this cycle is going to be any different. So the macro backdrop, is moving towards a recession. We need employment to peak. And inflation is not over, and it's starting to reaccelerate for the 2nd month in a row. And the metrics we wanted to see not reaccelerate have reaccelerated, like core inflation. So, we're probably going to see some more hawkish talk from the Fed. I wouldn't be shocked if their terminal rate goes up again. But the inflation battle is far from over. And like they've said before, many, many, many times, that they have the tools to deal with deflation. Like when equities go down, they have those tools. They proved that in COVID, right? So they are really concerned about getting inflation under control first and foremost. And if equities tank, even more so, and we get signs of inflation, something happens, then they'll probably flinch, but they're not flinching yet. And I wouldn't be betting on that right now.